100 million traders and investors are now tracking markets and managing their portfolios from a single platform. Modern global financial data flows like this: thousands of disjointed streams from worldwide exchanges, rapidly converging into one centralized hub directly in your browser. But the information feeding that hub doesn't come from retail sources. The underlying reference and market data is piped in from institutional giants like ICE and FactSet. Looking at this photograph of the New York Stock Exchange floor, you can see the density of institutional trading. TradingView takes that Wall Street data visibility and makes it accessible to the everyday user. By consolidating these professional feeds into a browser-based interface, the platform has become the standard operating environment for retail market participants. The primary lure of the platform is incredibly straightforward, an entry point that promises $0 forever with no credit card required. Yet, the moment you open an unfiltered super chart for the first time, you hit a wall of complexity. This flowchart illustrates the problem. Starting at the super chart, choices fracture into dozens of overlapping branches, from crypto to community indicators. To survive, you must cut through the noise, carving a hyper-specific path aligned with your intent. Without a predefined, strict workflow, having access to every financial tool on Earth doesn't improve your decision-making. It actively degrades it through analysis paralysis. We can evaluate which tools are worth your time using this 2x2 quadrant chart, measuring the effort required to master a tool against its practical impact. Let's plot our baseline. The platform's built-in supercharts and screeners land firmly in the low-effort, high-impact zone. The input here is simple. You set specific filters to scan across global markets simultaneously. The outcome is immediate efficiency. You instantly separate a handful of actionable assets from thousands of irrelevant tickers based on basic fundamentals. But there is a major trade-off. You have to know exactly what criteria you are looking for before you even open the menu. If you log in without a strict set of parameters, you will just endlessly scroll through lists of tickers without ever actually taking a position. Screeners act purely as an amplifier. They speed up an existing, well-defined strategy. They cannot create one for you. Moving beyond manual scanning requires digging into the platform's deeper algorithmic layer. This is driven by PineScript, TradingView's proprietary coding language built specifically for designing custom indicators and backtesting trading models. Looking back at our quadrant chart, PineScript requires a massive shift. We plot it high on the effort axis, with a highly variable impact on your actual returns. The input required here is steep. You must choose, dedicate weeks of your time learning the specific syntax, or spend your capital hiring freelancers to code. The promised payoff is an automated, highly customized indicator that perfectly maps to historical market data. But this feature hides a dangerous trap. It is incredibly easy to over-optimize your code to perfectly predict price movements that have already happened. A rigid model built for past conditions fails to lock into the unpredictable nature of a live market, leaving you with false confidence. PineScript is a highly effective tool for backtesting, but it actively harms traders who mistake a perfectly coded historical model for future predictability. We can map the loudest part of the platform directly onto this chart. The social network and editor's picks land decisively in the low-effort, low-impact zone. Scrolling through the community feeds presents a major psychological trap. Instead, you rely on conviction borrowing, adopting other users' setups as your own. The irony is thick. TradingView states that the best trades require research, then commitment. Relying on the social feed entirely bypasses your own due diligence. Once you do have your own conviction, you reach the final step, execution. The platform allows you to connect supported brokerages directly to your charts. This photograph of the dense CME group floor shows the physical reality of live execution. Hitting a button on a clean web interface masks the highly complex routing required to actually fill your order in those pits. Direct integration gives you the convenience of centralizing your charting and execution in one window. However, it also centralizes your risk and strictly limits you to the specific brokers TradingView has chosen to partner with. This matrix separates the platform's tools into 3 distinct feature sets, each serving a different market participant. For the passive investor, the toolkit is lean. You need basic screeners to check fundamentals, economic calendars to track earnings, and you must strictly ignore social feeds. If you have the discipline to stick to just those features and ignore the complex indicator tabs, the free $0 tier provides exactly what you need. For the active trader operating on short time frames, the required toolkit shifts. You need direct broker integration, and you must purchase real-time market data. The divergence is clear. Passive users must actively curate away the platform's noise to maintain their free access, while active traders must accept a recurring financial cost to secure the essential execution speed their strategy demands. Finally, we highlight the developer tier, which offers enterprise features like lightweight charts and business widgets. These B2B solutions require dedicated engineering resources to embed into external websites, completely removed from the standard retail charting experience. Regardless of which column you fall into, the ultimate goal of any trading software is singular. It must actively remove friction from your decision-making process. Succeeding on TradingView has nothing to do with utilizing every tool they offer. It is entirely about building a ruthlessly efficient workspace, hiding everything else, and simply executing your plan.